All right, guys, welcome to this video where I want to show you some very, very important things, very simple and important things in trading, just to let you know that you don't need to break the bank of knowledge before you actually trade profitably, okay? There are basic things that you need to understand, basic dynamics that you need to get yourself familiar with, kind of trends or kind of way to approach a market depending on the current formation of markets, which could like be a trending market or the current position of price, maybe at a demand or a supply, general things that you need to know and put into consideration for you to, have a structured way of trading and, of course, achieve profitability over time. All right. I don't want to know how, hard trading has been presented to you by whatsoever mentor that you have been with or whatsoever thing or knowledge you've tried to acquire over the internet. Just follow me in this video as I break down certain concepts in the simplest of form for you to actually decipher. All right. So basically, we all know that price moves in impulse, impulse correction, impulse correction, impulse correction, irrespective of where price is going. Price moves in impulse correction and so on and so forth, going around to seek liquidity. And the fact that price is going around to seek liquidity, it now forms what we call structure, where people say, oh, this is uptrend, this is downtrend, and so on and so forth, okay? Now, in trying to trade profitably, you open the chart, like what are the things that you should look out for? What is the logical reasoning you need to apply to the market? What are the kind of patterns you should trade? How you should actually approach those kind of patterns with respect to, current position of price, with respect to current direction of price. Is price trading towards a certain, demand or supply? Is price at a demand or supply trying to, reverse? You need to know exactly what price is saying for you to know the next direction to take, and trading demands you approach the markets with so much calmness, you need to put yourself together. You shouldn't be, irrational in your thinking. You need to process information and, of course, process it fast. So for me, once I get into the market, what do I look out for? The first thing I actually want to check is check for structure, quickly check some higher time frame structure and then streamline down to a more lower time frame structure for more candle data. All right, that is the best thing. That's the first thing, because going to check the higher time frame structure will give you the proper bias and proper orientation. So the exact location, the exact location of price, the exact axis of price. And once you now look at the surrounding formations, on the left-hand side, you will be able to tell, what price is trying to do. Is price trying to move up to go and clear certain liquidity? Then you should know that price is trending upward at that point. Approach your entries with a trending market in your mind, okay? Price has induced this liquidity, price is already at this higher time frame supply. Oh, that means I might be expecting a reversal. So you should know that, your brain and your reasoning will be channeled towards reversal patterns and, footprints of charts that can actually aid your decision, right? Now, let me give you an example. Let's say price, I come to price and, price is actually trading upward. All right, let's say I get to this area and let's say maybe the point where I met price is around this area, okay? So if this is my higher time frame structure, all right, from simple analysis, I just know that, okay, price is trending in the upward direction. We just grabbed the previous external liquidity, all right? And we just grabbed the previous external liquidity, which was here. Okay, we just grabbed the previous external liquidity. I want to properly annotate so that everybody will follow, Le Chatelier's principle in chemistry states that equal volume of all gases under the same temperature and pressure must contain the same number of molecules. And I teach by that, concept. Once I'm trying to teach, irrespective of your, background in trading, I always want to ensure that both the beginner, the intermediate, and the professional, contain the same number of molecules, like they understand at the same rate. So this is the previous external liquidity. External, right? Liquidity. Previous external liquidity. After price, grabs external liquidity, it simply means that we have a new low. We have a new low that has produced a new high. So this is a new trading range. So me entering the chart and I'm seeing price around here, definitely this simply means that price has grabbed external liquidity and price now has a trading range, this low producing this new high. That means the next impulse is going to happen inside this trading range, right? The next impulse will happen in this trading range. And I already met price here. Of course, there are some perspective of the market where you view this price. You will see it as a very strong downtrend. Let's say maybe you go to a corresponding, lower time frame. You see that a very strong downtrend. But when you look at it from a higher time frame perspective, you will discover that price is already approaching places where reversal could happen, if we take our Fibonacci and I think my Fibonacci, let me on the 50%. All right. So if we take your Fibonacci, discover that price is already even at discounted area. So that simply means that you want to, start looking out for zones that can cause possible reversal, right? Probably check out for liquidity that has been grabbed and start looking for places where price might want to, have a reversal and start looking for patterns and looking for lower time frame intents, looking for formations that will, give you entries, all right? Now, if I enter a chart and I see price doing this, what decision that I'll be looking forward to take will be different from when I enter a chart and I see price around here. What does this mean? This simply means that, okay, I think I should draw another diagram on the right-hand side just to differentiate things for you. Okay, so, all right, the same kind of diagram, we have price do something like this, high, we had low, we had a new high, all right? Now, for this first one, this is A. I actually want you to follow it very well. So once I say diagram A, you know what I'm talking about. And once I say diagram B, you know what I'm talking about. Please follow me carefully. All right, follow me carefully. I have your best interest at heart. And I want you, to understand these things. I want you to understand these things. So let me do this. Have price do like this. Okay, like this, like this. All right, and let's say we start seeing price coming this way. All right, so for diagram A, I came into the chart, I saw this. Now, what I am going to be looking out for is that price is already at discounted areas, probably would have grabbed some internal liquidity. I would have spotted out for my possible demand that is capable of reversing price. And then I start looking out for, accumulation or sort of range movement, looking out for intents and some surrounding factors that, that aid proper trading of intraday, tradings. All right, so I start looking out for reversal around this area. For what? For a buy continuation. I start looking out for reversal for a buy continuation, all right? So coming into the chart and seeing price at this current area, what my reasoning will be different from when I come to the chart and I see price around this area. So for this area, I will be looking out for, price giving me a range structure and probable intent rather to the upside, giving me a clean entry so I can enter and drive to the next external liquidity, all right? Or maybe price could maybe break this low, down, give me an opportunity to probably keep selling after giving me a range structure. So here I'm looking forward to, buys, possibly buys. Now, when I come to this area, when I enter the chart and I meet price around this area. This is a similar, this is a similar diagram, right? But the difference is just the current position of price. So of course, this is an external liquidity that was taken, all right? Now, once I see price doing this, once I see price in this current location, okay, what I will be looking out for will be different, because the current position of price, taking, the trading range A and B into consideration, the current position of price is so much at a premium level, all right? Price is taking out external liquidity and price just started retracing. Of course, from, normal structure, we want price to retrace to, discount possibly, all right? And the reason I'm saying possibly is because price could still give us opportunity to actually buy. But normal thinking is that price should actually retrace to discount, okay? And if I meet price here, it simply means that price is still at premium, all right? I might want to look for, like, an opportunity, right, to actually sell down to where, some zones around discounts, so that I can benefit from this sell, all right? So that simply means that once I come and I see charts already started the retracement, I will have to look for, patterns and, understand the price action of the charts to pick entries and drive to the downside. All right. So you want to understand the structure. You want to look at the structure. Look at the higher time frame structure. Is there anything price is chasing? Is price trying to approach a certain maybe supply? Then if price is trying to reach certain destination, you could just know that price is moving towards that destination and look for entries that will make you ride in the direction of price. More like the popular saying that we should always trade in the direction of structure. All right, we should always trade in the direction of structure. If let's say maybe I have a diagram like this, I have price, let's say maybe I have something as deep as this. Okay, let's say price is traded, for example, let's maybe lower, and price is probably now coming towards this area, like maybe price is strongly bullish. Price has maybe taken this liquidity up here. So price keeps going. Let's say, for example, when price was maybe extremely bullish, right? When price was extremely bullish, it could be that, or maybe price was trying to chase a certain external liquidity. And I probably maybe have a zone or a supply where I know that, okay, this is where price is going to, test. If I meet price around this area, with respect to how bullish I've seen price to be, I just know, oh, price is aiming for this external liquidity, for this liquidity here, to induce it and probably utilize the base above it. I might still want to look for opportunity to buy because the trend is very, very strong. And when price comes to this area, I might want to look for, sell formations, at least for a rejection, until we probably break significant structure and want to start, moving down for a long time. But then it is very important you check the structure of the market, relate higher time frame structures to lower time frame structures to know exactly where price is. Price might be buying on a 15 minutes, and you might think price is extremely bullish, whereas if you check the weekly time frame, price is just approaching a weekly supply, and we might have a massive downtrend in no time. So you want to know exact location of price. It will help you. Okay. Then, of course, very importantly, you will need to know, demand and supply. Those are the places where price are always headed. If price is going to, grab liquidity, price might, be heading towards a certain demand or supply, or maybe a fair value gap, right, for price to use to make decisions. So you want to check out those zones with respect to, the structures that you have analyzed. Then very importantly, the trade direction, which I've said in structure, right? If price is heading somewhere, look for price formation to continue in the direction of price. If price is bullish, look for formations to continue it. If price is bearish, similarly, same thing. Okay. And of course, most times, when price is trending in a certain direction, I use the concept of valid pullback, okay, of which most traders or maybe mentors have simplified it to what we call ABC format, but mine is quite deeper than that, of which I tell people the what's it called? Which I tell people the deep things of it, you know, in my mentorship. All right. Let's say maybe you meet price has already hit a certain, let's say maybe a certain supply, and price is now trending downward. Of course, you always want to look for a very nice pattern, and the pattern is a pattern that grabs liquidity, you know, break structure, give an incomplete pullback, give a second break of structure, price comes to induce the incomplete pullback to tap into the base that created or that grabbed liquidity, and of course your target is the second break of structure, you know, and price keeps doing this. Price keeps doing this until we get to a point where price probably wants to reverse. So take note of this pattern. You know, you see you see grab of liquidity and followed by a break of structure. This is if I meet price in a trending way. Of course, this doesn't mean you should just cram this. You need to also look at the surrounding, you know, price action to understand things that are happening around. All right. So this incomplete pullback, which I call my valid pullback, is where I'm looking forward to, you know, to be induced so that I can find reason to enter around here. And the same thing repeats itself over and over again until price, you know, gets to destination. You know, you want to have this in your head. So some people call it the ABC, you know, rule, where they trade above. This impulse here is your A. This grab of liquidity that breaks your trade is your A. This incomplete pullback is your B. And of course, price creates a C. So you trade above B and drive down, your C is your target, and it continues like that. So if price is trending, you want to, you know, look at something like this and use it to get precise entries. You know, you can't take up to 5 of this and 3 won't go in your direction. With good risk management, you are good to go. But then do not cram this. Also understand the current, you know, give meaning to chart with respect to what chart is saying, all right? And also your logical reasoning, very, very important. You need to be able to think, all right? Of course, don't think too much outside of the box because sometimes you can overdo in trading and it might not end well, all right? Just ensure that you give brilliant thinking, brilliant reasoning with respect to price formations, okay? I'm coming downward, or for me, I might be coming downward like this price grabs liquidity, you know, break structure, okay? I'm expecting that, okay, this incomplete pullback is where it needs to be induced. And funny enough, this now coincides with maybe Asian high. It will just give me more confidence because I know that Asian highs and lows are most times liquidity, except if they align perfectly well with structure, all right? So I just have so much confidence that, okay, this is my incomplete pullback. It's also Asian high. That simply means that it's very much valid for it to be grabbed as liquidity, and you have a good entry and you start driving down, and so on and so forth. So please, it is not so difficult, right? You just need to make things simple. You just need to make things simple. Don't make charts any more complex, you know. Draw limited lines, understand what you're doing, understand time sessions, and of course, know the pair that you are trading, know when there is usually volatility in market or when price creates good entries. For example, I trade the USD pairs most of the time, EURUSD, GBP USD, sometimes gold. You know, these pairs are pairs that usually give good entries during London and also good entries or re-entries or reversal during New York, right? And if the patterns or the understanding of price that you have, all right, that gives you edge in the market, it's maybe not forming at a particular point in time, it is not compulsory you trade. It is not compulsory you trade. Let me tell you something. If you come on the chart, you have a system that works for you, and price does not present you a trading opportunity. Ladies and gentlemen, you have traded for that day. You have traded. It is not compulsory that you must click buy and sell whenever you appear in front of the market. Once you appear in front of the market, you have done everything that needs to be done. You have crossed your T's, you have dotted your I's, you have done your analysis, you have waited for your zone. If price doesn't give you entry, you have traded for that day. In trading, you can either make profits, make loss, or break even. So if you don't take a trade for a particular day, see it as a break even day. Don't feel guilty that you stayed on the chart for a long time and you didn't execute a trade. Would you rather let it be that you stayed on the chart for a very long time and took a trade by force and end in loss. So please keep that at the back of your mind. You know, structure and liquidity, demand and supply, trade direction. Are we trying to trade a reversal, or are we trading in the direction of a certain trend? All right. Also, I said your logical reasoning of price behavior needs to be intact. So I just want to show you some trades, like 3-4 trades that I took, you know, in the last couple of days, and explain my thought process, how I follow price in a very simple way, having a perfect understanding of the market, keeping things very simple, and then achieving maximum results. So let's move on to EURUSD, and let me show you some of the trades that I took in the last few days. So ladies and gentlemen, this is EURUSD. This is, I think this is the 15 minutes. This is the 15 minutes time frame. All right, we can see that price was extremely bullish, you know, just having impulse, little correction, and price just keeps jetting up. All right. So I came on the chart on this day. It was on a Wednesday, the 21st of August. And I needed to see what price was going to do. I needed to analyze price and, of course, you know, now trade it. If you look at my chart, you will notice some certain boxes of colors, right? This blue box of color, the green and the silver, you know, gives me my trading sessions, okay? The name of the indicator is Asian Session Range by Rob Minty. Asian Session Range by Rob Minty. Okay, so this blue session is actually my Asian session, okay? So it starts, my Asian session starts from 1 a.m. in the night, and it ends at 7 a.m. in the morning. 7 a.m. in the morning. My London session starts at 8 exactly, but of course I would have been up by like 7:30 or to 8, and my London session ends by 12 noon. Then my New York session starts from 1 o'clock. By 1 o'clock, I'm already on charts. And my New York session ends by 5 p.m. So after 5 p.m., the only thing I want to do is to analyze chart for the next day. I would have been done trading, okay? So I came on the chart and I saw this. Now, this would not just give me the information that I actually want to know, even though I can see, you know, I can see structure playing out, you know, but at the same time, I need to go to the bigger picture to see what is actually happening, all right? So let me go back, let me go to, let's say maybe daily, and let me see where price is probably headed, okay? Let me go back to daily. I think I need to, should I delete this or maybe move it? Okay, I just want to move it further. So I've moved it. All right, so I have this. Okay, I have some markup that I have before. I don't want to clean it because I used to learn from my entries again and again. Okay, so I have this. From what we can see, I have been extremely bullish. This bullishness is extreme. I've been extremely bullish. So I came here, I saw what price was doing. I checked price formation. I said, okay, price came to induce a certain liquidity here, all right? Very nice. And of course, we had this trading range, this high here, we had this high, okay, that created this low. This is a trading range. Everything that happened on the right-hand side is within this guy here, okay? So this could be a move that probably came to break structure in a previous, you know, trend, but at the same time, we are still within this range, and we had price taking this liquidity that is here. So I needed to check, you know, liquidity validates area of interest, liquidity validate basis, liquidity validate zones, liquidity validate demand, validate supply. So price inducing this liquidity, I needed to check, okay, where is price headed? Price has induced this liquidity. It should be heading to a certain base that liquidity has validated. And the only base that I saw here, okay, is this, which is at this extreme here. So this is the base. You can see this base right here. Okay, so I drew it down here. You can see that price has not gotten there, but I knew price was going there, and price has been extremely bullish. Okay, so in my head now, going down to a more lower time frame, I probably want to, buy price towards the supply because we are still bullish. See every single candle here. Just have little rejections, we move up, little rejections, move up, little rejections. So we are still very much bullish. But of course, we've been seeing some kind of rejections, and it simply means that price is slowing down. Look at the sizes of the candle slowing down. We have induced liquidity. We probably want to trade into a base where that liquidity validated so that we can probably trade downward. Of course, that will be a supply. Trade downward for a long time, or maybe trade downward as a retracement, okay? And once you have, gotten entries on a lower time frame, you now want to come back to the higher time frame to know possible areas where price might actually trade to, of which I have a line drawn here. That's, okay, price might actually, come back to this demand here. But then I'm interested in continuing this trend until where we probably have a reversal, which is this base up here, right? We have established that on the higher time frame. So let me go back to the lower time frame and see what price is doing. All right. So I came here. Mind you, this is the higher time frame supply. So let me just write it. Higher TF supply. This is my higher time frame supply. This is my higher time frame supply. Okay, so I'm waiting for what price wants to do there. Sorry, I think I need to reduce this. All right, so this is my higher time frame supply. This is my higher time frame supply. So from what I can see, I can now start, pointing out my zones that I want to actually identify. I said always ensure that you put structure in mind. So look at what we have here. We can see price trending upward. We had a high, we had a low, price created a new high, but we had a new low and price created a new high. And we have started retracing. Very good. Now let's start putting proper annotation to this to give it meaning, because looking at chart, you might not have meaning, might not have meaning to you, but once you now annotate, you now give meaning to it. So what I can see that price took out this last external liquidity. Very nice. Previous external liquidity. Previous external liquidity. So this previous external liquidity. All right. Now, price started the move from here. Look at the low that created this high. So from what we can see, from the size of this candle that I can see here, it simply means that the retracement has started. So this is high. I mean, this is low. This is high, isn't it? Now, from, my demand and supply, I told you that I actually want to trade higher here, but of course, price will always move in impulse correction. I actually want to trade high. I am very bullish, but it doesn't mean I can't catch retracement with my understanding of price and what the daily, market, or what market presents on a daily. Okay, so I have this, right? This is the low that created this high. So this is my trading range. From here to here is my trading range, all right? So like I said, basic things, if I take my Fibonacci from my swing low to my swing high, all right? Anywhere below this area is my discount. This is my discount. Anywhere above this area is my premium. Now, I've created a new high and I am interested in buying, but price is currently at premium. So I can catch a sell down to discounts. If price gives me, footprints of a very good entry with respect to some of my understandings or my understanding of the market, of course I'll trade. But if not, I might just wait for price to come and give me, buy formations for me to buy. So I saw price here. It simply means that I could be interested in selling if it's clear to trade it down. Could be interested in selling to trade it down before I probably now buy to come and clear the next external liquidity, because this is the new external liquidity. Once price comes to grab the internal liquidity, this is the new external liquidity. So I might want to move up And if price give me reason to sell, I want to sell and probably come down, and so on and so forth. So I'm interested in selling right here. Okay, I'm interested in selling right here. Why? Because price is currently at premium. Now look at this current position of price. This is actually, 8 o'clock on the 21st of August, 8 o'clock on 21st of August, which is, we are already approaching Asian session. Of course, definitely, we have to sleep. That is why I trade London and New York peers. I can only analyze markets, right? But my trading is going to be the next day. So let's see what price we present for us the next day, because I'm interested in selling, except if when I wake up, price has already gone to discount. I can just look for opportunity doing London or New York and buy. But if I meet price still at premium, still at this high price in this trading range, the next day, of course, I want to sell. So let's see let's see price formation. Okay. So I'm open-minded, and what happened? So we entered into Asian session. So you can see my Asian session. My Asian session starts from 1 o'clock and ends by 7 o'clock. So by 7 o'clock, I'm going to put a stop to this because that is when I usually wake up. So this is 7 o'clock. I am up by this time. This 7:30, I'm already on my chart. So now price is still at premium. When I woke up, price was still at premium. And I came and I'm like, okay, we're at premium. That means I still want to sell to discount because we still need to come and grab, some internal liquidity, which could be either this low right here, grab this guy, or maybe grab this guy. Or once price is already at discount, I'll just be looking out for maybe entries for buys. But then I'm still at premium. So I'm interested in selling, even though we are very bullish. Please listen. Now, I saw things that are familiar. I've seen my, this is more or less like a downtrend that started. So I spotted my, ABC pattern for a downtrend. We have a high, we have a low, a lower high, lower low. So this lower high here is the incomplete pullback. This is the incomplete pullback. So I told you that for trending markets, we want to look for okay, of course, this is actually the move that I went to grab liquidity or whatsoever. So this is a pattern, we had a low, we had a high, incomplete pullback, a lower low, double breakout structure. So we are meant to come and induce the previous high, which is the incomplete pullback, tap into a valid base and then move downward. So that means I want to trade above the inducements. So I want to trade anything above the inducements. Interested in trading above the inducements. Entry above inducements. Entry above inducements. Or incomplete pullback. Incomplete pullback. Incomplete pullback. So I'm interested in selling above the entry above inducement or incomplete pullback. Okay. So I'm up this morning. I'm like, okay, you can even see that my incomplete pullback is coinciding with Asian high. And I said Asian high and low are usually liquidity that needs to be grabbed depending on how price presents them. There are times that price take entry from even Asian high and low, depending on where they are in structure. But for this, I just need to, trade above it. And what is the first thing that I saw? I saw a valid base above it. Let me clean this line. So I saw a valid base above it. What was the valid base? I saw this. This is my first area of interest where I actually want to sell. Okay, there's no need for any further confirmation. And if price doesn't use that, I will still, even if price takes me out, of course, every high here is still valid, all right? But then this is what I'm expecting. Incomplete pullback, double breakout structure, tap here, and we trade down. So I had my entry set. So I'm like, if price activate me during London, fine, because this is a London pair. I'm already awake for the morning. Price activate me during London, I move. So I gave it a little breathing. I think it was like 8 pips stop loss. Yeah, it was 8 pips stop loss, right? And if price takes me out, I'll still take from this extreme. So this is the contingency. This is like the extreme. I can still take from here. This is still valid. right? So I had my entry set. And my targets is 1:6, but then by 1:3, I should have taken, you know, significant profits. This is around 1:3. Should have taken significant profits, right? But then I'm trading down to discount because I actually want to buy. So I think price might come to induce this guy or this guy. All right. So this is a London pair. I'm on charts. I'm seated on charts and I'm waiting for what price wants to do. And let's see what price did. Nice. Perfect execution. I took this trade. It was a very nice. So it was a very nice trade. So you can see what price. The price struck there by what? By 8:15. So if you are trading London and New York pairs, you need to be on seat during London, be on seat during New York. So price activated. If you snooze, you lose. So my New York session ends by 12 p.m. So I'm going to pause charts. I'm going to pause charts by 12 noon. And who knows, we can see re-entry. Okay, so I've paused the charts. So London has moved certain number of pips, right? Which is very nice. So let's imagine somebody didn't trade London. You come, we're already at discount. We can actually maybe start looking for areas where we might want to sell. But then price is actually still trending downward, right? And looking at price formation just before New York, because this is a New York pair, right? I can see that after price mitigated this, price started trading lower. And look at the mitigations from this area. We had low, we had a high, price traded downward, created a high, you know, a low, a high, a low. Now, if you look at this actually gave me a nice pattern as well. You can see price grab liquidity up here. Liquidity grab up here. Let me indicate it as X. Liquidity grab up here. Then this down here is actually break of structure. So price still presented BOS, like something that we might need to risk on during during New York. So this is the start of New York, which is 1 p.m. Of course, the peak of New York is 2 p.m. But then I'm interested in, you know, selling above this. So grab of liquidity, price traded lower, created inducement, created a new low, right? So I want to trade above this inducement, above X. I want to trade above this inducement, which is like my ABC pattern, right? High, low, incomplete pullback, a new low. So, and this is happening around in New York. So I want to risk an entry here. So I actually risked an entry there. And I wanted to see if New York could, you know, give me entry to follow it down. I think this was another 8 pips, just a little breathing space. And I was ready for what price wants to do. You know, I was ready for what price wants to do. And let's see what price did. Price, you know, tapped into it nicely. Now let's look at the time. Price tapped into it at exact, this is 1:45. 1:45, close to 2 p.m. You know, those are the peak of New York. From 1:30 down to 3:30, 4 o'clock is the peak of New York, and price traded downward. The same pattern I used in entering this, the, you know, ABC, the incomplete pullback, was what I used in entering this, because this is already trending markets. So just basic logic, basic understanding, and you are fully ready to trade. What happened? Price, you know, got to my target. Price got to my targets. Now, of course, you know, I have it in mind that I am actually, you know, bullish. I wouldn't consider this as a break of structure per se, because there is where price is headed. Looking at the higher time frame, price is extremely bullish, extremely bullish. I cannot just consider this as, you know, as break of structure for the bigger move. No, I will have to see a big distribution, maybe on a 1 hour or even on a 4 hour, because this bullishness of price, needs a good range structure on a good or considerable higher time frame to cause the major reversal. But then, of course, I'm still heading to this yellow zone here. So this day of trading went, this entry, very nice. All right. So, but then you also want to, stop trading for that day. London has passed, New York has passed. Go and do something. Go and rest, watch movie, surf the internet, analyze charts before you go to bed, then wake up early to see if you can catch London move or New York move. So now let's see what price did. This is already night, right? So I guess I'll be sleeping. Not like sleeping, but I would have checked. This is 1845. This is around 6, 7, 8. So price will soon enter into Asian range, Asian session. So I will need to wake up very early to see if I can, spot an entry. Like for now, I'm interested in buys, and my buys is to probably come and take out this external liquidity here. So let's see what price did. So we entered into Asian session. Now let me pause. You can see my Asian session. My Asian session started from this guy, from 12 o'clock, all right? So just before I slept, I saw that, okay, I think we've had some significant price has reached its target, and we've seen structure is becoming bullish, right? You can see that price is already doing, high, low, high, all right? So I want to see, I'm already interested in buying, okay? So let's see what happens, all right? And Asian session was forming, and I'll pause it when I wake up. So I usually wake up by this time. This is when I wake up, all right? This is 7:45. I'm already on charts because I know the pair that I'm trading, right? I'm already on charts. So when I woke up this morning, this particular morning, all right, I discovered that, oh, we are already, getting bullish in nature, right? This was the last structure that I was taking. This is BOS on the lower time frame, and we are already at discount. This is BOS, all right? Okay. So of course I have my Asian low here, right? This is my Asian low. So I'm like, if I actually want to trade, okay, I'll wait for price to actually retrace. And of course, since I want to buy, Asian has formed a liquidity, a sell-side liquidity that needs to actually be grabbed. So I need to, look for a base below that I can actually trade from. Okay, so I spotted this very nice structure around here. Or like, as price gets to all these areas, I actually want to buy. I'm interested here, and if price takes me out, I can still have this as a contingency to trade. But then I've changed direction, so we can see change direction, a broken structure, liquidity. So this is more like still like an ABC. We had a zone here. We had a zone here, right? We had a zone here. Okay. Price broke structure. More like we had an inducement, which is like Asian low, incomplete pullback. We had a new high. So I want to buy below this incomplete pullback. It might not show very like an incomplete pullback here, right? But this is Asian low, which could be liquidity. And if I set my entry here, wait for to take price here, if price doesn't activate me, so be it, I won't trade. But this is how I trade. Okay, you can go and look for the indicator, Asian session range by Rob Minty. So I had my entry here, and my stop loss was just below here. I think it was 10 pips. Where was I targeting? I was actually targeting this external liquidity, this next external liquidity, or this next high. This is my next target. Okay, so now let's see what price did. That was my next target. Let's see what price did. So price first came to activate during London, okay? And next thing, this was New York. Price came deep into that zone. This is around, exactly 2 o'clock. So I think there was a news release, and we had price struck TP immediately. So I think there was a news release. I was on chat when this news happened, and it was very, very quick. In fact, I didn't even have chance to even take a screenshot of my entries. It was actually very fast, all right? But I I actually, took a screenshot when price was even going. Okay, so this happened so very fast. Very, very, very fast. And I've said it times without number in my previous videos that fundamentals, doesn't affect your analysis. It only provides volatility. If price is meant to buy, fundamentals will push it in that direction. If price is meant to sell, fundamentals will push it in that direction. If price is meant to go and, mitigate a certain demand and let's say maybe buy, price will push it to that demand, activate that demand and push it back up. So it doesn't affect analysis. It only provides volatility. So now we have seen that, this external liquidity has been taken out. All right. Do I want to sell? Price has tapped into this zone, but do I want to sell immediately? No. Now, New York has ended, which is around 5 p.m. So anything I want to do around this area is for me to analyze chart for the next day because I understand the pair that I'm trading. I've tapped into this zone, but I wouldn't want to just, trade blindly and, take an entry here. Of course, some people do it, but I'm not those people. Take an entry here and leave this big stop loss, 40-something pips, and wait for price. No, I would rather trade when price gives good entries. Do you get what I'm saying? Now, the fact that I've seen this rejection doesn't mean that I want to jump into the trade. No, price will have to tell you what to do. Like price will initiate you into the trade. Price is not that wicked. Even if price gets to your area of interest, reacts from it, now you see that price starts going, you don't need to allow your emotion make you jump into an uncooked trade. If not, you are going to eat raw trade. You're going to eat raw food. You wait for the trade to be properly cooked so you can actually eat very well. All right. So I've tapped into this base. If I succeed in getting an entry here, I might not want to consider this as a new low or the new low that created this new high because this is now a higher time frame zone. Price might sell considerably from here. So then let's see what will happen. So this is 3 trades so far, right? So I follow the footprint of chart again, right? So this is evening around 9 p.m. I wouldn't want to trade by this time. I just think that price might want to, what's it called? Price might want to range so that it will present us entry the next day. So of course you have to sleep. You can't trade every single time. Leave price, let it form during Asia, but wake up very early in the morning, be disciplined with that time to look for entries. And if you don't see, don't worry, it will always present itself. Right? So what happened? We entered into Asian session and I woke up the next day. Let me pause. I woke up the next day, all right? When I woke up, I was trying to, analyze and see what price is doing. Let me take out this Fibonacci to see what price is doing. Okay, I said, if price can successfully, break this low here, that's what I said. So if price can successfully break this low, I can see this as a break of structure. But if not, this demand might just hold to push price higher. But then if price can break this low, I will see it as a break of structure because I need intent. I need price to tell me that, okay, I think I want to sell. Okay. So let's see what price did. I didn't have anything clear for this London. There was nothing clear. None of my pattern formed. I didn't actually take any of this trade. So it wasn't clear to me. There was none of my pattern that formed here or something I'm familiar with. So tried price traded down. Price traded down. All right. This wasn't still clear to me, but at the same time, I realized that we had but this is a break of structure now. This is a break of structure. This is BOS. All right. This was a break of structure. Okay, for me. All right, this was a break of structure. So I just knew that, okay, we had a new trading range. This high that created this new low. I had this here, so this high that created this new low. So I was interested in actually, selling when price, comes or gives me a significant retracement. I was interested in selling because this break of structure had already happened. Okay, so I was interested in selling. All right. So this is my new trading range, of which I might now start looking out for. Just like what I said, if you take your Fibonacci from your swing high, right? From your swing high to your swing low, you see that, okay, price can start selling anywhere above this level here. Price can start selling anywhere above this level. Okay, so you want to start looking out for good entries that you can actually take. All right, you want to look out for good entries that you can actually trade. But then I think I'm actually interested in trading above this high. But then I will still have to, look for lower entries just in case price doesn't come this far, because we are already at premium here. So I think I took 2 trades around here. I think I had this entry, and of course I was still interested in the extreme because it's still part of the trading range. I was still interested in this extreme. I was interested in this extreme right here. All right, so this wasn't so very, wasn't so very clear, right? But of course, it's still a trade that you might want to consider to take. Okay, so my take profit was going to be this demand here, just in case price still want to continue buying from this area. All right, and at the same time too, I had this extreme in my mind. I had this extreme in case price decides to use that extreme. So I think that was around like 12 pips stop loss. Okay, so I had these 2 zones in mind. All right, so which is very much premium. They are above the 50%, and I was waiting for what price was actually going to do. Okay, I was waiting for what price was actually going to do. So let's see what price did. So those were the 2 places where I was trying to actually sell. So okay, that particular day price was actually just ranging and ranging and ranging and ranging. And of course, I still kept my calm. And this area here that was actually in profit, price eventually came to take it out and mitigated this last area here. Price came to induce this high. If you look at this, price actually induced it, and tapped into this area, and I was in this trade. And I was ready to, to bear the consequences of my loss if it doesn't go in my direction. I was ready to bear the consequences of this loss, because this is, the extreme of this trading range that I was trading from. Now, I told you that Asian high is mostly used as liquidity, but I said except if it aligns perfectly well with structure, because this base that I'm selling from is an Asian, it was formed during Asia, but it aligns perfectly well with structure. This is the, last supply, right? That if price takes it, I'm no longer interested in this trade. So it's worth risking. Okay? What happened? Price, started falling. And of course, price, got to final targets. All right? Price got to final targets. And like I said, this is a higher time frame supply. So I am not so much interested in this demand, except if price gives me reason to. Okay? So if at all I want to trade, I'll need to go back to my maybe 4 hour my daily to look for, some demands that might probably be used. All right? And of course, price kept going. Price didn't really give me any reason to. Price kept selling. So I think some people still caught some of this. Some people caught this sell here, but I wasn't on seats that morning. I think I went to the gym. Yeah, which was this morning. It was the trade happened today. So, and this is where the trade is at currently, right? This is where the trade is at currently. Okay. So you can see how I follow the footprint of charts to, to give very basic entries. See how we took this sell, this buy, price entered into the higher time frame zone, give us reason to sell, eventually came to take us out, but tapped the extreme zone, sold, and so on and so forth. So for now, I'm actually still bearish on EURUSD. But then if I come to my higher time frame and check, I'll discover that I have, good place that I might want to actually, trade to, which is what I've highlighted here. Anywhere below this, this last external liquidity that was grabbed on the daily. So that simply means that price might still retrace to give me more reason, to sell down to this area with respect to what the daily is showing me, okay? So the fact that we're having significant push from this time frame supply does not mean that we want to stand maybe a massive downward move. No, price might just want to retrace to continue going higher because we are still, in a bullish market, but we have encountered a higher time frame supply. So for now, I'm still going to trade EURUSD downward until price gives me reason to continue to buy at significant areas, below this line that I've drawn here. This was the last daily external liquidity that was taken, and I need to see price trade lower and give me reason to buy. So it is not far-fetched, right? This is actually, step by step on how to trade. So I made this video, this is around 11 p.m., right, of this particular day. And of course, I'm not going to trade, but I'm going to wake up very early tomorrow morning, which is 7 o'clock to 7:30, to be on charts for price to give me footprints, to give me reasons, to give me areas of interest, to validate certain places that I might need to execute a trade, and I will execute it. And if it doesn't give me entries, I wait for New York, and so on and so forth. Now, this is what I repeat daily to trade. And there are days where I don't trade. Sometimes I don't trade 2 days, 3 days, because price probably didn't present something clear. But when price presents something clear, I risk. Even if I'm going to use stop loss, I'm going to be proud of it, okay? Ladies and gentlemen, I think I've been able to pass significant knowledge and wisdom across to help you trade better. I want you to watch this video over and over again. Please and please try to understand it. Try to decipher it. Try to backtest it. Try to trade confidently by your own self. Don't be scared of making mistakes, but always ensure that you learn from your mistakes and try as much as possible to develop a very simple and basic system that does not give you palpitation, that does not give you high blood pressure, that you can always recognize with ease and trade. Do not okay. So guys, I have come to the end of this video. Do not forget to subscribe to my YouTube channel. Turn on notifications so that you can always get videos firsthand when I release them. And ensure that you trade with caution, you trade smartly, and you trade profitably. Thank you. I love you. I am Mr. Peak FX. Bye-bye.